following is an updated and technical analysis on Elf Beauty, a company of the consumer defensive sector, household, and personal products, where I mentioned on the 18th of 2023, we're trading spot price 121.52, and I issued a sell signal. I recommended considering stepping away from this extended multi-year uptrend line associated with just a substantial increase off the mid-May reactionary lows of 2022. And that was a very significant turning point with multi divergences. A nice clean divergent high followed by a near-term divergent high with the negative and bearish divergences really constructed amongst all three technical momentum indicators. Nice clean crossover, bearish crossover sell signals in both the oscillator and moving averages. Just a very violent red sell signal closed below the zero line threshold in the oscillator histogram. And here's the update. After issuing that sell signal, and the entire trade was good for, call it a 17.18% crash. And I have now added a 100 new price support level, 156 price support, where we had 3 additional reactionary lows, and now our 4th daily interval reactionary low. And I believe that will be the trigger and or forced liquidation, force stops go off if and when we go to retest and undercut, especially taking that level out. And what we have here is a consolidation phase with a nice counter trend snapback rally, which could resemble a potential bear flag continuation pattern with a perfectly measured 27% crash backfill on an unchecked gap back down to the 86.59 price support level, which would undercut the 200 exponential and 200-day moving averages, which would come with just a much stronger wave of selling, in my opinion, where you already have the moving average convergences, the oscillator, and some of these key technical momentum indicators damaged underneath their zero line thresholds. Huge. I mean, we hadn't seen a red candle close on the histogram of this magnitude going back since the COVID flash crash, and nowhere near right before the bottom really fell out. We had an all-out panic flash crash. You have to go back all the way to the year 2020 to get any resemblance of what we see here in the near term off the oscillator histogram and the damage that has been inflicted heavily amongst this price support stock. But watch out for these flags, this flagging action, especially the 107.91 price resistance, where we ended up backtesting and were rejected multiple times, finally solidly closed right back above it, and had a reactionary low near shy from hitting it, had that snapback rally. And here we are, bull traders, long traders. If they want to avert the bear flag continuation pattern, they need to potentially step in right at that 107.91 on call it an aggressive long trade entry to avert snapback the counter trend rally, avert the bear flag continuation pattern, to go on to retest the 50 exponential moving average and the 120.38 price resistance up above, and a rechallenging of the 50-day moving average, and if prolonged, to want to rechallenge those negative and or bearish divergences. Ton of resistance up above, and just a very strong long staircase up above, whereas we had just a huge chunk of volume profile around this region. So I believe the 105.56, if we go on to rechallenge it, that will be the ultimate moment of all critical inflection points for Elf Beauty. And again, we take that level out, volume price profile, 200 exponential moving average, we're going to see a waterfall sell-off of an event, in my opinion.